Okay, Saturday, November 19, 2016. Going to run through some commodity futures here. First off, I want to start with here's at FinViz. This is year to date. So as you look through, this is the performers year to date. Orange juice is thin, ethanol is thin, palladium is somewhat. Sugar, decent amount, since Americans eat over 100 pounds of it a year. Silver, of all things, it's up 18% for the year. That would coincide with a very long position of the dollars in late December 15 and going into 16. The long dollar position came off, and we had commodities move. Okay, well, remember that from the beginning of the year. Now we're coming to the end of the year. Is there a continuation on the upside, or for some that didn't participate, are they going to participate, or are we rolling over, that kind of thing? At the other end, rough rice, I just posted a chart on StockTwits of long rice. I don't trade it, but yet 3/4 of the planet eats rice daily. Hogs, we're getting a bounce in hogs. Cocoa, continuation of the rollover. Wheat, I'm looking for a position play of going higher. VIX, I'm leaning equity pullback in late winter of 2017. GDP, the British pound, 30 plus year low. I'm interested. Natural gas, just did the video. I'm slanting. What am I? I guess longer term, that'd be monthly. I'm bullish natural gas. Intermediate, kind of floppy. Have to get through 2017 summer. And then short term up, like I said, 10 to 13 cents higher. Feeder cattle, same things, just basically a bounce. I am noticing, though, that gasoline and oil in that beginning to turn, and we'll go through those. This is basically unchanged. If you take how about that one, huh? Notes and stuff. If last winter there was a long position in the dollars, and then it came off, and then commodities went up, the position in the dollars that we should actually see some of these commodities probably be the weaker ones in 2017. Maybe orange juice, things of that nature. Sugar, maybe 2-3 cents lower from here, 16, 17, 18 level kind of thing. Silver, continuation lower going forward because of the stronger dollar. Depressed copper prices, strong dollar for exports. Some of the agricultural cotton, possibly a bounce. And then the Canadian dollar, I noticed some commitment of traders, and that's where we'll start. Commitment of traders report, like I mentioned, comes out basically every Friday or approximate. It includes up to Tuesday's data. It finds out the poker hands of the players. The commitment of traders down here does list what the commercials are: producers, merchant, processor, user, swap dealer. Non-commercials or large specs, managed money that are reportable in small specs, the onesie twosies. Desegregated report, when it's broken down even further: commercials again, the swap dealers, non-commercials money, and non-commercials non-reportable onesie twosies, the little guy. Okay, and then they have them broken down 2 different ways here. Let's see here. So we'll start off with, okay, I have the wheat. All right, so wheat price has been trading lower since January 14. We have that on there. This is a pretty good, I like this as a bottom here. Anything under 4 was beginning to look for establishing a position on here. We did have a bounce and a pullback, so at best it's a sideways pattern here. But I do like the fact that it traded above the open on this bar here, okay? So what I have and what I want to point out is the little red line here is the commercials. Like here they're long, coming into the down movement and went higher. Here they were short, commercials were short. Here they were long. You can see short, long. And they've basically been long going forward for a while here. Where's that? That's up in this area, so $5. So the commercials are anything under $5 to them, they're hedged. So if there is a follow through on here, you toward to aim towards 4.80 to $5. Okay, that's how I kind of look at it. When here's where they were eager to get in to be long under $5. So to them, the marketplace is they cap in their prices at 5 on here. You can look down below the green of the swaps dealers here. What do we have for managed money? The blue line. So blue money, they're basically short, right? Okay. So the funds and stuff are net short, and prices seem to be stalling here. So it's not working for them. So I believe that wheat is susceptible to a run the other direction. At the producers are getting long, and the commercials are basically stating that they want to buy. As you can see, the inclined buy on any weakness here. So on wheat, I'd try to play it on the long side here. I'll look for wheat trades a little bit later here, seasonal type things. Corn, what I noticed on the corn, and you can see the highs here's $5 and $4.40 and $4.40 again, and $3.60. We'll just treat this as a bull flag here, similar to wheat, in which it hit a decent reversal on the bar, traded lower and close higher kind of thing. All right, and you can see that the green here is a large spec. So you go, early on, you go where the money's headed on here. Okay, they did decide to buy in on the pullback here, though they looks like they kind of made the little low here. Okay, in your commercials, and down here is your producers being short. So you have a good dichotomy of signals on here. You can see how it weaves in and out. Long side, the large specs pushing it up till you're at an extreme, just like here. Extreme goes the other way. Okay, so here it's kind of a no man's choppy area. So corn, even though I'm looking lower prices going into 2017, there may be a swing on here in producers, things of that nature. How I'd look at this is possibly a pullback in the dollar. You have the end of the year, and we also have commitments to foreign countries for export sales, things of that nature. You can see managed money. So once again, if corn moves up, then the managed money would have to get in. With beans, take a look here. You can see the wide swath here where the commercials were short, or excuse me, the producers were short. So they're actually hedging in here. Blue is managed money, and we talked about them being long here. The green up here, the large specs pushing it. I'm not as excited about beans at this time. It is beginning to narrow, so maybe a choppy. It's one of those, think of it like corn, wheat, and beans and rice, and that one's the NASDAQ, one's the Russell, one's the, you may be right that it's a grain or oil seed and ag, but you're in the wrong one. So, like I'll put wheat and corn and beans, how we're looking at them for right now, for a bullish bias. Soybean meal, same thing again. You can see how, you have extremes here with the producers hedging at the highs. Basically, things are narrowing. The green here, swap dealers are picking up on this one here, so eventually they'll have to flatten out. What do we have here? But things are beginning to narrow. At best, it's a larger sideways pattern. That's how I treat it, and then maybe an inverted head and shoulders. But I'm not, on being maybe for right now. It's not that time of the season. You're looking to going into late winter, lower prices. Bean oil. Okay, so here you can see there's bean oil. The commercials are short. So any strength, say if wheat and corn pull beans up and bean oil, I'd probably be interested in shorting up in here, just due to the fact that the commercials are relatively short. Large specs are long. So if they fail to press one more time through here, I'd assume them to be close to the previous highs in bean oil positioning. But I'm gonna lean towards the commercials here and to look for a short side in bean oil. I believe we played bean oil long last week. What is for what was it? It was $300 or something. I think a half a buck or something. But that's just to get your feet wet for those of you going to commodities, trading futures. Something not as fat of a tick. Like corn or bean oil is $6. Corn is 50 cents a penny. Beans can run 3 times as much, wheat twice as much as corn. So start people off at corn. You're looking at anywhere from $100 to $200 a day at 2 to 4 cents a range. Take a look at your numbers before you dive in, kind of thing. Oats is a nice one that usually starts things off here. Commercials have come in. The price is a decent swing up. Any failure up here, though, I'd look for it to come through at the other end. Let's take a look back in this area here. Okay, so here's a good high at $5. We're at $2.50. Oats can come back under 2, obviously. So that's what I'm looking for here. Would be a setup that Oats pokes their head higher, but then fails and then comes through into May through October of 2017. Okay, so you have to kind of go along with the flow here. This is kind of a thinner traded contract. Okay, so it's a good leader for the in general. I guess Minnesota's the #1 oat producer compared to most of its feed, but compared to like beans and corn and wheat, that kind of thing. But it's one of those, somewhat of a leader here. It does have, from where it's at historically, it's at the lower range here. Let's see. I guess I've never punched this one up to see how far. Okay, so here's oats, right? So here we're talking a buck, so it can go below a buck. Okay, this is coming into the commodity low. And we had 1, 2, 3 bull markets pretty much, and we haven't really reset. We're back to this area, so that's what I'm looking at, is that some sort of, let's see here, if that's the low. Well, I have one market comes back through, but what I'm looking for is that, it works its way up, fails, and then comes back down. So what do we have here? Approximately the same, about 230 and change, and then it came back down to about 125, 130, $1.30, right? Where are we at? This thing that keeps popping up, 124, 1 1/4, 130. Okay, so basically the same thing here. What is this? This is a January line. So this 2003, this is like a January. So here we are. So it's something like this, where you swing up and fail and then come back down and trade below it. So something under here, then I'd be interested in oats and eyeballing it. Like you can only go to 0. So this is only $750 here. Okay, so it's $2,500, $2,500, $2,500, $2,500. It's $5,000, just like 5,000 bushels per buck. So per penny is $50, just like corn, wheat, oats, beans, E-mini, S&P. So anything under, anything under $1.50, I'd start eyeballing this thing here, because you catch a buck on it. Margin levels are nice too, low, but like I said, it's thin. Okay. All right, so that's oats, and this one here was the rough rice. Like I said, I don't trade this one, but just this kind of pattern where it's kind of hammering in a bottom down here. If I go back, let's see what we have going on here. Would you believe, hey, what do you know, a lawsuit? There's a lawsuit up there. Someone choking off supply. When it's thin like that, just pay your fines. Don't pass go. Come back and do it again, basically, right? Cost of doing business. So there it is. Rice obviously looks like it can come further. This one would actually be a fun one to actually watch to see. Where do we have? 98, 99? Yeah, rice was a nice one here. Rice would be one to watch to see, to work on the drought situation here. Like I said, shorter term here, it's kind of hammering out the bottom. You do have the commercials let long. Producers are long, so it's one of those where they'd rather buy it on the market than put it in the ground kind of deal. That's how I look at it, producer wise. Boom, 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 boom. We have some here, basically just the levels coming up, on here. I don't think that will come up to here. I probably see a bounce, and then looking at that longer term chart, it does look like you have your little triangle going on here, right? Yeah. Maybe a jab through and reversal and come down in 2017. Okay, one of the wheats. Okay, hard red winter wheat, and here you can see the larger degree pattern. Okay, so wheat is down in, we'll say, the lower 80%. The old where prices are at. So this is how, this is what I'm looking for. It's just a longer side. This is multi-year, 1 year, 2 year, 3 year, 4 years. Boom, 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 and then she takes off running. That's what you're looking for here. A move from here is every 5, 10, 15, 20, 25, 30, 35,000 on margin. So that's, of course, you have to get the contracts, which, of course, I don't think wheat goes out 7 years. But you know what I'm saying. You have to get it. So it's basically you have to roll, and that's where you run into problems. You roll it, you roll into long, and then they take you out in the following week. That's the fun in games, but you can see the commitment of traders here, and I'll drop it back down. What do we have going on here? So large speculators were they were long in here. Prices really haven't gone anyway. It's flat. They're undecided, but I would lean just for right now. We could say shoulder, head, shoulder, just short term. We're talking, it's at 30, 40 cents higher. But like I said, I'm looking to establish some sort of position trade at a lower price. This is Kansas City. Here's Minneapolis, right? Yeah. Spring weight. You can see a little bit of a turn here. If we get a pullback in the dollar, right? Commodity prices are higher, which means if you want to buy our grains and stuff, corn, wheat, oats, Boeing airplanes, everything, a stronger dollar, right? We talked, 90, 96, 97, 98, 99, 100, 102, 103 on the dollar. So here I think they might be getting a running start that if we do get a decent pullback in the dollar, wow, whopping 2-3% kind of thing. It's right now it's percentages both ways, but when dollar gets back up to 120 plus, then it'll really have some gyrations. But they may be getting a running start here on wheat. Okay, and this is Minneapolis. Same thing again, going back. Okay, this would be is what happens when you don't put your stops in, and top tick all the way back down. So as you can see, wheat, this Minneapolis, only a couple of decent runs, but this is what I'm looking for. It's just quiet sideways action to be able to accumulate and get in there. You can see it goes from nowhere here come January, and by July, you get your swing. Same thing here. Here you have a move up into the July, but it carried over July of the following year. So this is 1 year. Okay, same thing. These are $2 ranges, so this is 10,000 a swing, basically, we'll say. Same thing, 10,000 a swing. This one's a lot more, call it to the come down. We're getting a sideways, a little bit higher area, which is fine, but for right now, just the pattern of, failed to make a lower high, but failed to make a lower low, poked ahead above it, half back, you just figure that there's a swing in here. Okay. Let's see here. And we did look, I guess, have the two of those together. Go back here, look at this wheat. Same type of deal, right? Okay. This is Chicago wheat. So Chicago wheat, Minneapolis wheat, then Kansas City wheat. See, little flag action there with a decent weekly bar. Minneapolis. So definitely try and run some wheat here. That's how I'd kind of look at it. I'd play it in 20-cent increments, basically. Let's see, wheat. Okay, crude oil. Okay, so here we have crude oil, a larger sideways. The best I can say is an inverted head and shoulders here. Okay, but I did notice that when we get up to it, there's Canadian dollar is beginning to lose its on-balance volume, and also a commitment of traders are beginning to change. So we may have a short time, we may have a pullback here in the dollar. Maybe it lasts a week or two, and then people can get into the commodities for what they need. They actually, taking delivery of the stuff, and then We'll go from there. But on oil here, decent bar here for last week. The UWTI and that's they're getting rid of it. So the old conspiracy thing. I mean, if both of them are going to go nowhere, that would just be, it would work for both sides of them, right? If the underline doesn't go anywhere. I haven't read up too much about it. It just seems odd that they'd get rid of a decent product. I don't know if there's anything from the SEC or whatever. I just look at the charts and then go with the gut reaction kind of thing. So crude oil, I think it was 50 on 50 on Brent for right now, and I think 48 or so on regular. But we'll see that West Texas here in a minute. But basically, I think this is going to hold for now. Eventually, it will be retested as the dollar continues higher. We always seem to do so. Heating oil, same thing. You can see that here was the commercials that they were short, pretty decent up in here. It's dropped about 20 cents, and they're lifting their shorts. Producers are pretty well short here too. So basically hedging for what they have to produce in the future here. I look for a bounce, bounce with the products. I think it was gasoline. Looked a little better, kind of sliced underneath here. Okay. Here's the thing too, is that as time goes by, we're getting mergers in companies, mergers in refiners, so the industry is getting healthier per se, but for the large secular cycle, it's over with for a while. I want to point this out back to crude oil. Okay, so this is all through the 90s, right? Strong dollar. Oil's at $20, $30. It takes off running. I wish this went back even further. Does it go back? No. But all through the 80s, the same thing, except for after the first Gulf War, we hit 40, and then it was basically stagnant. So when I talk about dead money in oil, this is basically it. Oil may get a bounce up in here, but just basically stuck sideways for a while. Now you can see a bounce here, but then possibility of flagging and rolling over. Who are these guys? The producers are pretty well short. So they may have to chase after this thing, huh? All right, gasoline, looked at that. Larger sideways pattern. Things are beginning to narrow, not as wide. We found a happy place here. $1.40 in gas, which is $3.20. It's at 80 cents, 40, 20, 220. Plus or minus 220 for me, 80 cents over spot is what I calculated. Natty gas, okay, so we looked at this on the last video. It came down, 17-year low, first run up, a pullback, decent looking bar here for some sort of continuation. Trying to see if we can get something started to run it up to 4 area here. A little fluff up in here. What did we say? 420. All right, ethanol futures, just a lot of sideways here. This is what I'm, kind of looking at is, sideways. You guys are short here, producers. Okay, what happened after you guys were heavily short? And you lifted them all through the last leg down. September, October, November, December. So you probably going to do that again, maybe, huh? Okay, just watching it. When I was younger, we didn't have ethanol. We had a high fructose corn syrup. Shrimp futures. Okay, live cows. Looks like it's going to swing. They are marketing meat, beef pretty good in the stores. What do we have? What do I remember? They usually push it after Turkey Day. And then I remember, was it December? When we have lots of hams, then Jimmy Dean puts out those chubs, big 5-pound chubs of Jimmy Dean sausage. That was not too bad. Nothing like a home recipe and selling out for $300 million. And remember, Jimmy Dean, he starred in James Bond, Diamonds Forever, right? 1971. Yeah. The 70s. Okay, so live cows. Looks like a bounce here, but basically the same thing. Higher dollar. It's going to export issues here. Here, doggy, doggy, doggy. This would be the hogs. Give me a good chart. Give me a good chart. All right. So hogs were down to the lower area again. 1998. This price in hogs, that price hadn't been seen since the Great Depression. So that was kind of an interesting deal here. I had to look because my charts only went back to the 50s. I had to ask somebody, and lo and behold, Miss Invest Future, somebody nice. What's that? 5 Macintoshes later. It's somewhere on there. But I had to find a chart and went all the way back to the 30s. And I'm like, okay, you're talking a 60-year low in hogs. I want to get into the hog business. Of course, you talk to everybody, and they're like, why would you want to get into the hog business? I'm like, yep, 60-year low, I'm in. You go into the bank to get the hogs. They just take the hogs from the farmer the producer that's going belly up, and it's already in your truck. Turnkey, capitalism at its finest. Okay, so the hogs. So here we are once again. Boom. Here's an 8-year low down here. So the hog deal again. Strong, Smithfield, owned by the Chinese and things, they'll do their thing, exports, blah, 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 yada, yada, yada. But you can see hog prices are depressed. Eat your bacon. Did we ever have the other white meat? All right, that was lean hogs. Looks like we're going to get a bounce here, but you can see though that if you're into probability type thing, boom, 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 boom. So what is this? 1992. So here's George Bush Sr. So under 40 cents once, twice, 3 times. We'll call that 4. Close enough. 5 times in 20x amount of years, right? Every 5 years, what do you know? Here's a high, 14, maybe say 19 for bottom. What's this here? 9, 5 years is 14. That was the high. So 10 years, so 9, somewhere in there, which would be the recession. Follow the hogs. Feeders, right? Feeder cows, some sort of bounce, but they've been back here before. I think they'll probably hold up their weight here. Feeders, you can see just a bounce, but a long precipitous decline here. Stronger dollar does that, Okay, milk. Let's take a look at a longer term milk. Basically holding the mid-range. I don't trade milk much. Watch even very little of trade milk much. How about not at all? Just due to the fact of it wasn't on your screen years ago. So old dog, new tricks. Kind of like soybeans. That was the Rolls Royce before we received S&P 500 futures at $500 a point. Yeehaw! Milk futures, this just looks like corrective in nature. Probably between 18 and 20 it would stall. That's how I look at it. Back into this area. What's that? 18. Let's see here. I guess I've never looked at so that's decent. So these guys at the extremes again here too, huh? Well, it seems to be pretty decent. This is the first mouse. These guys are the first mouse. The second one seemed to be about it. So what do we have? The first amount of one more swing higher should do the trick, right? But I say 18 to 20, that would work. Kind of fill in the area, bounce back a certain amount. Milk. You got me, Johnny. Gold. Okay, so you have your commitment to traders, managed money, getting out of it. Large specs, getting out of it, kind of rolling over. But let's take a look at the longer term. You could see that here's the most amount of longs in a while. managed money, same thing. So there were a lot of bodies in there. And like I said, if it loses 1250, I think it's going to come down, I think 681. So I said basically this target down here, right? It's a low. I got 681. What a Kevin. This is 08, 09, right? So this should coincide with a screamer in the stock market and the dollar, right? And, commodities are coming down, selling tacos by the dozen, that kind of thing. Whipped everybody into a frenzy. I want to look at the short term, though. Okay, so the commercials are on lower prices beginning to cover. What I was looking for is I noticed that gold closed on a pivot level. And so it's like, well, then I look at the weekly and it's in between. So it's like, well, okay, here's where we're at again. Cracking this one opens the door. Here we're at again. Is there something of a bounce to just swipe the stops on the up above here? What do we have for a high? Well, no, you're not going to work. 31. You already know these highs, Kev. Yeah. All right. Before we come back down to 1050 again. So this was okay. So the beginning of the year is long bias long golden commodities was 1400, came close. So now the end game for me is 681 for gold here. But even if you draw a line, it could bibbly bobbledy boo here sideways for a while here. If the dollar pulls back, it's more of a tradable bounce. People are on the wrong side, of gold. This was to me, this is a good reactionary high. Now we trade it the other way. That's how I kind of look at it. Every once in a while, I notice these bars, this type of pattern after an extended period of time, but it leaves a fat move both ways, up and down. I should actually spend some time looking those over. Mark them up on my charts, Gav. But you can see the body's large specs moving in on here, and now they're rolling out. Right, so any bounce in gold, these guys would probably be getting out, right? Commercials are covering their shorts. Silver, basically the same type of setup here where commercials were net short after a period of time. There was a high. Now as prices are coming down, they're covering their shorts. The longs, large specs, and the managed money, they're getting out of it here. They're pausing here. So we shall see, right? See if we get some sort of, it's kind of like this. You get down, you get, what's this here? 1, 2 weeks up, back down, a couple of weeks up, back down, couple of weeks up, back down, couple of weeks up, back down, couple of weeks up, back down. But on the larger scale here, this just looks like it's going to come on down. So we're back to $5. Here's the lower end, I guess, so that'd be 8, right? I think that was the pullback after we hit up above. We came back to 8. So the target then now, of course, is underneath, what's this, 15 or so? 8 is what the ultimate, the ultimate target, of course, is to get $3 to $5 again and start storing. Tell all your grandkids, get a waiter job and start buying 10-ounce silver bars with your lunch tips. Trust me on that one. Just keep buying for 12 years. Keep your job as a waiter and store up this, that's what you do. That's exactly what I'm looking for right there. 12 years of Nowheresville and silver. Ta-da! That's what you're looking for. Long period of sideways. Here we go, right? Here's all through the 80s on copper. $1.50. Even less. What are we down? What's the low down here? 60 cents, 60 cents, 80 cents, 60 cents, 80 cents. We got a pretty good move. We came back. So it's one of those where you sneak up and then you crater. That's how I'm kind of looking at it. It just seemed odd, though. It was, let's see if we should close this thing down to show any commitments here. You did back here, actually, back in January. You had to stick with it, though. Here's some patience for you. 11 months you had to sit around and okay, this works out here. So the commercials were getting long. You hit the bottom, it bounced up, then they flattened out again. That was the end of that story. It did the same thing. Got out of it. Here was a decent, in hindsight, of course. They bought into it, and they kept buying into it. But here they're net short, and they haven't been net short that amount in a long time. So this would be world famous. The commercials are net short, right? Looking back, here's copper. So the last time they were short, 2013, up in here, and we'll say 360 to $2. Okay, so they're short. Producers are short longer than they've been in a while, right? 13. Nothing but, and here's the bar or the gray line for the new year. So, January, February rolling over. That's the thing I'm looking for in the stock market too, is some sort of reciprocal of last year's January and February low that we set a January and February high inauguration. 47% of the people, yeehaw, mamba jamba, who are these guys? Managed money. Yeah, the bullies. All right, to each their own. I'm not a big fan of closing your eyes, but that was a decent swing here. I will actually, for me, since, for me, I'm looking for the top on this here. Because you're going to have the dollar reflected in it with prices, right? Stronger dollar, we saw that in the past. This is all through the 90s, right? Strong dollar. And under Clinton, the dollar got to 120. So it's one of those things that, what's this, 2.25? Ding, ding, ding. Then I'd say copper probably 170, 180. That's what I'd shoot for, 70. That's not too bad. 80, say, yeah, compared to what it did there, right, Kev? Good boy, Kev. Way to smooth it over. All right, platinum. All right, platinum just looks like just continuation lower. Same thing, right? Rolling over. So platinum, $400 to $600. It's the range I'd aim for. Losing 800, right? Shorts or commercials were pretty well short. They're beginning to cover their way down here on platinum. What do we have for the traders? Traders were long here, and then they ended up getting short, getting cut back. The managed funds, God bless them. They were, but that's what it is. Short term, you go with them, and then the commercials, go with the commercials after a period of time. Right. So now they're short, so maybe they'll be the ones to push it lower. It's kind of obvious what the game plan is here. With the higher dollar interest rates and everything, whipping everybody into a frenzy. Yeah, I have to believe it's going to be a stall here. We actually closed at the high of the week, huh? That's some managed money, and that's the commercials, huh? I'd look for, if we swing higher here, I'd look for commercials to short into the move in palladium. Cotton, retest and close at the high range. The commercials are getting short here. You can see it at a substantial amount of time, though. So anything on the way up, they are. All right, so what do we have? So we have managed money, and little guys are long and shorts. So what you'd want to do is you'd want to keep an eye on cotton for some sort of, say, like open high and close lower, like it stalls at 75 cents here. If it comes back through 68, 69, then I'd expect it to go back down to the low 60s. Right? Where we're at, right? Yeah. Just draw your trend lines underneath there for a target, swing target up here, and then just behind this here. Yeah. Trail something at cotton. OJ. Maximum on OJ. OJ. High. This would be one of those that you'd look for some sort of, where we at, November? Cold rush in Florida. even though this is South America, you know, OJ comes from South America too. Whatever, it's a thinly traded one. But as you can see, this high, it's a rarity. It does, though, that commercial specs were short. Commercial specs are short. Here's the funds, but funds were higher back here. So it looks like funds still have room to run if they believe they're the ones who are going to cause prices to go higher here. This pattern here has me believe 220 just short term on here. I'd like to see where options are trading at. All right, coffee. Okay, coffee on this. Okay, so you have the green, which is your large specs. Okay, they're up there again, and prices coming the other way. So it's one of those that they're going to have to puke this up. And as you can see, the commercials are short. So I assume any more lower, the commercials are going to buy up, cover their shorts. And so I'm a little on the defensive here on coffee for now. It's South America, blah, blah, blah. But you can see, you know, where it crossed. They got in, and then it just ran out of oomph, came back down. Same, you know, and then they tried it again. But I'd keep an eye on this one here once it comes down, because it's going to be on people's screens. We saw how softs did. You know, we had coffee and your sugar, cocoa. I think cocoa's leading on the way down. Okay, so here's sugar. I was, like I said, looking for something on the weekly level here. If it can hold the mid-teens per se. Okay, so here's where sugar, about 10, 12 cents, right? And we're at 20. It's somewhere between, you know, 16 and 18 would be nice to see if it could hold. You know, but looking at the commitment of traders here, it looks like that move is pretty much done for now. It was pretty extreme, and so they're now pulling off their positions. So 17. It does have a decent amount of volume, but this one looks like to be reset here, because I was kind of going 1, 2, 3, 4, 5 on it, and this, you know, ABC type deal somewhere in here, and then the angle of ascent would increase immensely, sharply on a weekly movement higher here. Okay. Sugar, cocoa. All right, same thing, rolling over. You know, rolling over, expect it to continue to roll over. Short term, though, maybe a pause down here, 200, 400 lower. It looks like they are pulling out of their positions here. Eventually, though, the commercials will get long, right? Commercials will get long here. Yeah, commercials get long. Lumber, okay, lumber, max you out. Stronger dollar should be able to buy lumber from Canada. It's a thinly traded one, but you can see it has decent swings back and forth. I kind of avoid it. I just watch it for economic and things of that nature. You know, but it does, though, we're in the stages of building, so there would be demand on lumber. What I would kind of go with here is that I'd look for lumber to reverse maybe here, come back down, maybe with an interest rate hike December, and then commercials to get long. That's kind of how I look at lumber for now. That's how I trade it. The dollar, you can see the body's getting into it here. You know, commercials are getting short, but you can see this is a persistent trend. But here we are, right? So we only have, we're shooting for 120. There's a lot of talk. This is a breakout. We saw, you know, there's been enough volume in this last week here that, you know, put in on my trader jacket, I would like to spank the new longs, you know, like where were they here? It was interesting how we moved up off of this year. Okay, where are we at for the beginning of the year? Here's where we're at beginning of the year. So here's where we're at. And there were signs that the commodities, right? So the dollar came back down. 92. What day was this? So this is February, huh? Is that one Friday slide? I'll say yeah. Okay, so we get to 92, 99, 97, pull back to 94, Now we're at 101 and change. Okay. The commercials and that, they finally got into this thing. All right. So the angle of ascent, it's not logged. So I go off of there's the 30 degree, a 45 degree, and then a 70 degree. And when it goes insane, I call it a 91% chart. But for right now, at best it's inverted head and shoulders. We're definitely we definitely know now, right? We've seen it in like Bank of America, things of that nature. But it's one of those there were more people long back here. Let's see, is that about right? Approximately position wise. Okay. You can see that there are more people involved, and then we had to pull back. So basically what I'm saying is that there's more room to run on the upside, but like everything else, oh, please, I promise to buy, bet the ranch if you give me a pullback. That's what basically my emails are saying. So I try to, it's like I said, it's one of those things that you just close your eyes. Buy and close your eyes. That's why I say split up your accounts. Well, the whole dollar one, one for the dollar, one for, so something should go pop. It's not the whole account. It's just one segment. For, pop is, you have the stops and everything in there, and all of a sudden it's a gap away or limit down, like the dries thing. It's just like vacuum city. British pound, you can see a lot of bodies in here, Like I said, I like it for a swing higher. The commercials started buying on this, they're liking it up at the 150 level. Okay, so that would be the target I'd swing for, right? That's to them, that was where they were interested. Canadian dollar. Okay, so here we have, this is interesting. Okay, so the Canadian dollar is coming down. Commercials get long, you get the bounce, right? Commercials get long again on the pullback. See the bounce. Actually, they stayed long this entire time. They double dip and then it went higher. Okay, so they were short all through this period, but so now they poked their head long. Okay, we do have end of the year, straightening of books. I will say the 68 will hold on here and see that there's some sort of bounce. It's just due to the fact of like the dollar, oil, gold lighting on a daily support. It's not that it's going to happen. It's just that it's susceptible to some sort of, bounce. There's been enough talk and everything, on the whole dollar deal. I mean, looking at this thing, here 2000, that was the bottom. Retested again in 11. That was an October low, right, of stocks. Then we've gone straight up. So now all of a sudden we're swinging into this one, and you can just draw your trend line underneath here. What did we say? It lasted 2 years, and that was the end of it, right? We talked about 2 years, and then it rolled over from the breakout, I think from like 92 or something right here, right? Yeah, from the lower number again where it hit, and then it just continued on. It was over within 2 years. So what is that? It's the spring of 18, and then all of a sudden we're up in here. It's like I said, I'm working on an exit plan here on the dollar because I've talked about it long enough down in here, and now I'm working on an exit plan. British pound we went through. Canadian dollar. Still got a 5 here. Yeah, we'll just say shoulder, head, and shoulder. We'll say that this holds. I believe it didn't go back far enough. The Canadian dollar during that, I think, 80. There was a period where there was an extended move higher on the Canadian dollar. Japanese yen. Go back maximum. All right, so you can see here the red. They were long on here. Okay, and it took off. The commercials. They were long on here. It took off. Now they were short, and we're coming back. Okay, so we're coming back on the Japanese yen. Oh, I could see they come through and then took off. Went short. Financial, why aren't you down there? All right, so the same thing again. We're looking for some sort of bounce so some folks can get in. Um, I don't expect this decline, precipitously decline, because that would affect bonds. Then we'd actually have some pretty scary interest rate moves. Then I'd have to stop talking about a single hike in December to like move and a half, but that would be on the front end, and of course that's the back end basically cratering, that kind of deal. Alrighty then. This was Frank. Okay, this one caught my attention here. All right, you had the spike in commercials. They bought it. They were long, and you got that the lift of the collar, or the collar being put on. And you have the lift of the collar. Okay, here they moved in here again. Okay, so my concern is that they've run into the Swiss franc here. What do we have for a short-term look to this here? Yeah, so you can see it's picking up here. The commercials are getting in long on the Swiss franc here. So I'd look for some sort of Swiss franc strength. It does have that look like it's going to roll over, right? Yeah, it's going to roll over, but short term they're kind of poking their head through on buying the Swiss franc. So even though it looks like, it's going to lose it, it's going to continue lower, which I feel it will, and it should. In the short term, you might get some whippiness here. You saw how, it comes down 1, 2, 3, 4 bars, and boom, comes flying back against it. So it comes down 1, 2, 3, 4 bars, boom, and comes back against it. So that's short term what I'd be looking for, which of course, a stronger Swiss franc would probably mean a weaker dollar, right? Here's the euro. Some people are talking parity. Okay, so here's it at, here's 85 and stuff. You can just see it sideways and took off. This is the top here, right before the creator of the economy, boom, 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 boom. So we assume that this should bottom again when the U.S. market does this on the other side, right? They ran it up for the real estate market. They run it down, for a financial market. Okay. The commercials are long on here. The deal is obviously, how do you know you don't get a third or it slices? That's fine. But like I said, you're going to get a lot more attention here, and then things can get violent. The whole deal is the risk on this. It's going to go to parity. That's fine. There's 600 pips below, but what happens if it jabs through at 5 and then comes back through to 10? That kind of deal. And that's the thing, the caution have to watch out for. Australian dollar. Okay, Australian dollar, as you can see that the commercials are short on this, and it's coming down. Here's where they were long, and it went up. The commercials are, to me, the ones in the know, but you'd go with the early money, like large specs moving it here. Okay, large specs are, somewhat positioned long, and it's rolling on top of them. Mexican peso. Actually, let me go back one more. Kind of take a longer look here and see what I have. In relation, so you can see that, the money guys are going to have to get short. There's a target at 60, and then down here at the bottom at 50. I assume it's going to fall somewhere in this area here over the next 2 years. Bark, bark, bark. Bad dogs. Okay, yeah, really. All right, so here's the Mexican peso. As you can see, it's been in a precipitous downcline, looking for a reversal here, which of course would, like I said, the emerging markets type of thing. This does look like it's just put in a bottom and now working our way off the other way. That would be strength in the Mexican peso. That would go along with what we've seen in the emerging markets. Stronger U.S. interest rates mean that our money, abroad is going to be expensive to other places too. Some places are having economic problems, so it doesn't help out the situation. But like I said, if I'm going against the dollar now, it'd probably be these emerging market type things. The ruble and the rupee and Mexican peso of note, because you have, how much worse can it get, or, how much better can it get, that kind of deal. It's a long, precipitous down. You get all the news you wanted, and you're not getting any follow through. And that's how I kind of look at it with news adjusted. You can see the commercials were long and it went up. They're beginning to, any weakness, the commercials are beginning to buy into it. Kiwi basically rolling over here. This was a decent, when you look at a lot of different signals here, it's very minute, muted, but you get some wider signals. I would assume as the prices come down, you're going to see a larger degree of the Kiwi on here. And on a big picture level, it has room to come down 50 and 40 down here. Like I said, somewhere between 40 and 50 is, I see it sliding over the next couple of years. Bonds, this is what I mean. I mean, if it just starts, tick, 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 tick down, that's not going to be healthy. You can try and run the Russell as much as you want to keep the kids rabid in that, but this is just, this is moving pretty quickly here. If this doesn't spook the fence, sitters for buying a home, I don't, but that's moving at a pretty good clip here. Now this was 2000, but we switched over with different kind of paper here. 6 to 8% paper here, but you can see the hard slide, and the run in again. This is just during the run up interest rate wise for the financial collapse there, and here real estate peak, and then also we're coming down here. I can see it happening, right? That's exactly what we need to get the economic. Like I said, whoever gets in is basically one and out term wise. So you just kind of, Donald takes the brunt of all of this coming off of ZIRP, high interest rates. We can run the oil. We can, run you can run the stuff. There's just so much money out there, but that would set in play coming off of higher interest rates, the whole cycle again, like all through the 80s, it just went flying up. Interest rate won't rise, and then you had the next 30 years of it dropping. So basically the same thing. You can see here that the large specs were long, the bonds, these were short, and now commercials are beginning to get long. Okay, so that's a kind of lean that way here. That we're going to see some sort of bounce, probably seasonal related. Ultra bonds are kind of wide here. Just pointed out for those who trade the ultra bonds. Notes. All right, see, so we're under here. So we're in an area that paused prior. Okay, so that's what I'm looking for is we're going to get some sort of pause here. They're beginning to move into them. Okay, the commercials. But as you can see in a longer view here, it was, the hard slide. This does look normal though. 112 area. That's another 13 handles to go. Try not to get it. Try to do it sometime by the summer. Would be nice. Take your time. It's a shocker having to reprice everything. I mean, think about if you had you're going to offer some debt or something, and it's moving, 30 basis points a week plus kind of thing. Pretty scary movements. Fives, same deal. Just slow it down, but it's all falls under itself, right? Here's the top distribution, and then you do have asset managers Oh, they're long. Leveraged funds are short. Okay. And you're getting some spikes the other way here. Be careful. Fives and twos. This is the front end. This is what affects rates. So when you raise them, so this tick 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 tick. So I look at it there. Commercials. Where am I at? Same thing again. Um, who are these guys? Leveraged funds. So they got out of it. So they're getting out. Okay. So, small guys are coming in. All right. All right. And okay, some of these were kind of interesting here. Okay, here's 30-day Fed Fund futures. Okay, there's that. But what was interesting was the euro dollars. You have the commercials coming in pretty good on buying. And you have the large specs. So what I'm getting at here is that we may have world famous, sell the rumor and buy the news on this with an interest rate hike or whatever. My concern is you can see the commercials coming in here on it. They, for them, it's they're issuing paper and things of that nature. But you see that they're lifting it off. What do we have down here? Where's management? Management money is getting short. All of a sudden we're at areas in the past where we've seen bounces. So the euro dollars, like I told you before, be very careful on here. If euro dollar should bounce here, typically, then that would mean equities aren't faring so swell. And speaking of equities, here we are. All right, so we're looking at the E-mini on here. Okay, basically the rising going into expiration is because they're doing arbitrage, either with the SPY or with the large contract, and option related too. So you see the open interest picks up and then drops off. Open interest picks up and drops off. Open up and drops off. And here's your March contract, your June contract. Subcontract, that same type of thing here. There is a split between the two of those, between that one and the large. I like to show this one, indexes, S&P, and it shows both. Okay, here's S&P, the big one and then the small one. So on the big one here, your large hedgers, okay, they were all long. Okay, so they got long up in here. The blue line is the small traders. They were long. Okay. So, what you're getting at is there's a split between the two of them. Here are the small traders, and they were short the big one, but long the little one. So they're basically picking up nickels and dimes, per se, because of the contracts have different ticks in them. One's quarters, and the other's less than a quarter. Okay. Moving out to weekly here. You can see spikes here. The commercials were long at a low, that kind of thing. Here, the large traders were long and it rolled up. Like I said, I think it showed the chart was flat. Is it on here? Oh, it was over here. Yeah, S&P. Basically, it's flat, price is high. So this is susceptible as if the short position is beginning to put on. Prices would have to come down through 2050 on here, just looking at this chart. Move back the other way. Okay. Correctamundo, Kevin. All right, so I like to show that one. Weekly, that help at all? What about monthly? Any longer type pictures? All right, so they were buying down here. Buying down here. Greens were short. Hedgers were short. Okay, so we're looking for hedgers shorting. Oh, they're long here and it took off. So okay. What we're trying to do is, since there's really not a position set up and prices are kind of quote unquote flat for the last few months, there's really no bias because I'm looking for some sort of split between the traders. Like here, you have the longs in large specs and the E-mini. Okay, they were long. Okay, and the prices came down. Here, the commercials were short. Prices came down, and they begin to cover their short position. So if the E-mini comes down, I would expect the commercials to get long. Where is leveraged funds? They were long before the crack. Okay, so the fund guys and large specs seem to get whacked on here. They did pull off recently some of their longs on this, but to me, it's not really split wide. Does Dow have anything? Dow basically they were long. In July, post Brexit, prices came back. Same thing again. Leveraged funds, the managed money type of deal. Uh, they were in here long, and it came back against them. Commercials were short, and it worked for them. Commercials were short. There's still spread. Uh, the traders did run into this thing, and they can still pump it because they're not at extremes again. But just be careful. That's kind of like I said. That last 10%, you're on your own. Oh, how about this one? With all the rustle, with what's going on, hardly anybody was going in on this one here. That was basically it. You don't see the extremes of like here. Commercials were long at the bottom, long at the bottom. Everything kind of narrowed out, and now they have to decide. So we're back to the chase situation here. Mid cap, same type deal. Net short did roll over. The commercials are still holding their short on here. So that's the commitment of traders for you, right? Pretty much. So we like the wheat on the long side and the Canadian dollar, which would go along with oil. So it is. I'm kind of leaning that we see some sort of pullback in the dollar to kind of offset everything. It helps out the situation. I'd hate to see just interest rates just continue at the clip that it's at. That would start beginning to cause some consternation with folks. So there you have it, and I'll post this